So again, my name is Andrea Hampton with the Lehigh University Small Business Development Center, and it is my pleasure to introduce Kimberly Kelly today. Kimberly recently launched Trade Credit Specialty, an insurance brokerage offering expertise in trade credit insurance, including eggs and bake products. Kimberly is passionate about helping her clients leverage trade credit insurance to maximize credit sales and minimize bad debt, always with the goal of the policy paying for itself in increased sales and reduced expenses. And today, Kimberly will be talking to us about letters of credit versus export credit insurance, which is best. Kimberly, I hand it over to you.
Hey, thank you so much, Andrea. I'm so happy to have the opportunity to share this presentation with you. So you want the answers to the following questions. Number one, would my sales increase if I offered open account terms instead of cash in advance? How can I determine the creditworthiness of my export buyer? And what would I do if I'm not paid? When are letters of credit the best secured payment option? Why invest in a trade credit insurance policy? How much does it cost? And what support does Ex-Im Bank offer? Next slide. So to answer the first question, let's look at typical payment options. Cash in advance. This is great if you can get it. Businesses with a really unique product or service will probably do just fine, but otherwise you might be limiting your growth by requiring all sales to be cash in advance. If your competitors are offering open account terms, you might be losing business to them. Another payment option is cash against documents or letter of credit. These can be a great option for your first transaction with a new buyer or a non-creditworthy buyer because the bank will guarantee payment as long as the predetermined set of parameters are met. Lots of administration for both the buyer and the seller, and it costs about 1%, making this not a favorite option. The option that's every buyer's favorite is going to be open account terms. You've agreed to send a product or perform a service and receive payment for that product or service at a later date. In essence, you're providing your buyer a very low cost short-term loan. And I'm going to say that again, it's very important these days. You are providing your buyer a very low cost short-term loan. It's very important as we continue to experience increasing interest rates and move into a recession. So why would you agree to be paid after delivery of your product? The short answer to that is because that is how your competitors are doing business. Certainly large companies are doing business that way. Again, cash in advance is great, but you'll probably find that you'll want to compete with larger companies and win new business and continue to grow. You'll probably want to offer open account terms to do that. Next slide. So sounds good, but how does it work? How do you know if your buyer is creditworthy? How do you know how much credit is feasible? How do you know that you will eventually get paid? And what will you do if you don't? Well, it works like this. Large corporations have an entire credit management team. First, they require that their buyer complete an application. Next, the information on that application is vetted. Perhaps the credit management team follows up for bank or trade references. Perhaps a credit report from DNB is ordered. I actually have a client that used to spend $100,000 a year on their DNB subscription. Large companies might analyze buyer financial statements in addition to the references in the credit report in order to ascertain what level of credit to extend to their buyer. And that's a lot of work, not to mention that after all of that work, there's still no guarantee that you'll receive the payment that's owed to you. When you extend credit, there is always that risk of a slow payment or default. So what is the solution? Next slide. The solution is an investment in a trade credit insurance policy, which will mitigate the risk of non-payment plus provide other benefits. First, with an in-force trade credit insurance policy, you can win new business by offering open account terms, and you can do so risk-free while essentially outsourcing the due diligence tasks and the risk. Offering credit terms promotes a good customer experience. Remember, an extension of credit is the best low-cost short-term loan your buyer can get. And if you're willing to offer it, your buyer will be thrilled. Next, obviously, you'll have that protection against slow pay or protracted default or buyer bankruptcy. In the event of a claim, a payment is made according to your policy terms, but the carrier will subrogate the entire amount of the loss, which means they will not only attempt to recoup the money they've paid out, but they will also attempt to recover any amount of the loss that you sustained that wasn't covered under the terms of the policy, like a deductible or an amount exceeding the coverage limit. You'll gain some peace of mind. We can't put a price on that. Another benefit would be support for your financing. Insured accounts receivable can allow an increase in the advance percentage of your asset-based loan, or previously excluded accounts can be added to your borrowing base. Factoring with recourse becomes an option. Profitability, you may be able to charge more if you're extending open account terms, so the cost of the policy might be absorbed through higher profit margins. Cash flow protection, ultimately, bad debt reserves can be reduced or eliminated, and cash flow is preserved as a result of claim payments. Some carriers pay their claim as early as 120 days past the due date. Also, a policy might help to decrease your DSO, or your days of sales outstanding. If you choose, you can make the insurance carrier the bad guy. Ex-Im Bank will tell you that foreign buyers don't like to hear that the US government will get a bad report about them. Gain some leverage to use with your buyers to encourage on-time payments. Finally, access to information. Trade credit carriers employ underwriters who are industry-specific financial analysts. They all have their own D&B subscriptions, so you don't need one. Also, they may know that a buyer has begun to pay other suppliers late, which is good intel for you to have. Next slide. Of course, you're probably wondering, what is the cost of a trade credit insurance policy? And I am happy to report that it's actually quite a cost-effective method to secure unsecured credit. The annual cost of a policy is typically less than half the price of a letter of credit, with much less administration. Here's some real general pricing information on this slide. For most policies, the premium will be calculated by multiplying insured sales by a rate, which most of the time is less than 1%. The rate is determined by level of sales, industry, the creditworthiness of the buyer portfolio, terms of sale, just to name a few variables. But for this example, let's look at how a Ex-Im Express policy is priced. So if you want to insure $500,000 in export sales, 60-day terms on the invoice, that rate would be 0.65%, and the cost to insure that $500,000 in export sales at 60-day terms will be $3,250. If you're aiming to insure 2.5 million in export sales at that same rate of 0.65%, the cost would be $16,250. Eventually, small businesses will grow out of an express product. Private markets like Allianz, which is Euler Hermes rebranded, Coface, Atradius, to name a few, typically have a $15,000 minimum premium. So once you're insuring about 5 million, you'll have some lower rate options. So for example, once you hit that $5 million mark, you might be able to find a policy either with Ex-Im or one of those private markets at about 0.325%. And so that same $16,000 in premium will actually insure a much larger amount of sales. Does anyone have any questions about pricing? Now we can go to the next slide. So policies can be structured to insure a single buyer, a group of key buyers, as long as it's not adverse selection. A key buyer policy might be all of my buyers in China, or all of my buyers in Europe. Or you can insure whole turnover, which would be all of your credit sales. Ex-Im likes to remind everyone that no export transaction is too small to be insured. Ex-Im exists to bridge the gap left by the private carriers. They do a great job offering products to meet the needs of small businesses, not only with credit insurance, but with loan guarantees as well. Next slide. So my favorite product for small businesses is Ex-Im's Express policy, which is why I chose it as the pricing example. An Express policy offers no application fees, no minimum premium. It's just a one-time refundable advance deposit of $500 is required to issue the policy. It's pay as you go. Premium is owed monthly based on your actual sales or shipments. There's no deductible. Policies cover both commercial and political losses at 95% indemnity. Premium rate at the 60-day terms, as you know from the previous example, is the 0.65%, which is about half the price of a letter of credit. No additional fees for underwriting, no fees for collection efforts, no need to gather supporting documentation of the buyer's creditworthiness. It's a very simple, cost-effective way to extend open account terms to your foreign buyers. Next slide. So Ex-Im does publish the following criteria in order to qualify as a policyholder. You must be in operation for at least 3 years, at least one person working full-time, positive net worth. This is the biggie. The US, they will only insure products made in the US or services performed in the US. At least 51% of the product must be made here in the United States. The Ex-Im Bank is chartered by US Congress to support US jobs. And so this point is not negotiable. You do need a Dun & Bradstreet number, and you do need an UEI number. Next slide. Great. So let's review our questions. So
Kimberly,
go ahead.
sorry, am I on
Yeah.
the right slide?
Well, let's see. So that's our Ex-Im slide. So go down one more. And then and then that was if your business qualifies, and the next. And here are our questions. Excellent. All right, so let me get back to, all right. So would my sales increase if I offered open account terms? And my answer to that is, I think so, yes. If your competitors are offering open account terms, I think that you would be in a great position to win over some new business, but certainly I wouldn't suggest offering open account terms without an in-force trade credit insurance policy to mitigate that risk of non-payment. So how do I determine the creditworthiness of my export buyers? And what would I do if I'm not paid on time? And my answer to that is transfer that responsibility along with the risk of non-payment right to the trade credit insurance carrier. Number 3, when are letters of credit the best payment option? The answer to that, I would say, is the first purchase, or if the buyer is uninsurable. Generally, foreign buyers are willing to secure a letter of credit for the first transaction, but often with the second transaction, you might be asked to extend open account terms. Now you know what that is, and you know that you can safely extend terms with an in-force trade credit insurance policy. So why invest in a trade credit insurance policy, and how much does it cost? First, you'll win new business by offering open account terms, which essentially is a low-cost short-term loan for your buyer. You may be able to increase your volume of sales to existing customers if you've been conservative with your credit and you're currently selling cash in advance, cash against documents, or letter of credit. You may be able to increase your profit margin. You'll experience a consistent cash flow achieved as a result of claim payments. No need to use a line of credit or factoring for liquidity. You'll eliminate expenses such as collections, credit reports, and no more time spent performing that due diligence needed to extend credit. All of that responsibility and all of those expenses get transferred to the carrier. Unlike other insurance policies, a trade credit policy really can pay for itself even when claim-free, which is why I'm just a huge fan. It truly is a tool that will help grow your business. So what support does Ex-Im Bank offer is our last question we promised to answer. My opinion, the Express policy is a really great product for small businesses, but Ex-Im also offers multi-buyer policies, key buyer policies, single buyer policies, and a variety of loan guarantees. No transaction is too small for Ex-Im. And that ends my prepared remarks, Andrea. 20 minutes.
Thank you so much for that information, Kimberly. We do have a question.
Great.
The question says, as a new entrant to exporting, it has been advised I establish a revenue stream first by building a client base by offering upfront payments either in full or in tiers based on an agreed stipulation in the contract. How will export credit insurance assist me with building up my clients and still offer reasonable terms of payment that will allow for increments in revenue stream?
All right. All right. Give me a little more details. Is it possible, Andrea, to find out what the product is that's being exported?
Would it be better if we allow this person to unmute herself?
Yeah, that'd be great.
Okay, Yuchen, I'm going to allow you to talk. So whenever you're ready, if you can unmute yourself and provide more information.
Yes, hi, can you hear me?
Yeah, you're a little soft, but I can hear you.
Thank you. So I was asking the question about how to establish payment, and I know oftentimes it's a risk with export, ensuring that one gets paid.
Mhm.
And so, I'm just, at the very early stages. I'm still working on my export plan. However, the type of business I'm looking to export is a service-oriented business. I will basically be looking to provide services as an eye-related professional, looking to do certain things in the eye-related field. And so one of the export workshops I attended, I brought up the question about how I should set up my payment, so that I ensure that I get paid for the services. And the advice I received was to ensure that I first of all establish a cash only based type of uh, payment system whereby the foreign buyer would pay me either in full. Again, this is of course, going to be prior to actually performing the service, or have an agreement in place whereby the buyer would, pay maybe half upfront and then pay me the remaining half after I would have rendered the service. Either way, the advice was that I should ensure that it's a cash only. I should not extend credit at the beginning stages to enable me to establish that revenue stream and also build my client base. And then once I have done that, then I can begin to look into extending credit terms. So the question I had was, whether or not export credit insurance is of any relevance to me as a new person. I mean, is it something to consider at the beginning, or maybe it's something that I should be thinking about as I continue to grow my export business and figure out how I'm going to go about integrating that into my already
Yes. Mhm.
established.
Yes, I'm thrilled that you're asking this question because you're illustrating my point exactly. So you're newly established and you're really eager to find new clients. And extending open account terms is actually going to give you that leverage to kind of distinguish yourself and perhaps beat out your competitors and win that client over. So absolutely, I mean, cash in advance is certainly the way to go when you don't have a relationship with that export, or with that buyer. Do you call them clients or customers?
I think the term is foreign buyers, I think.
You do call them buyers?
Yeah, foreign buyers.
Okay, good. So yeah, so I certainly it's very typical when you're establishing that relationship with a foreign buyer they're expecting cash, and cash is certainly best for you because there is no risk there. However, with an enforced trade credit insurance policy, you can mitigate that risk of non-payment, and you can feel comfortable offering those open account terms as long as that export buyer is insured. So I would say you're a perfect candidate for that express policy. What kind of service do you offer?
It's going to be an eye-related service. So basically, I'm an ophthalmic I'm an ophthalmic technician by training,
Mhm.
and I'm looking to provide services in the sphere of looking to you know uh, uh, run ancillary diagnostic testing, and also with whatever machines might be on ground, and also perform certain tasks such as checking people's vision, checking them for glasses, checking them for any other eye-related conditions that they may have. Basically, providing that service, which I believe is needed. I believe there's a gap in that eye-related field, um, outside of the U.S. that needs to be addressed. And I think that by trying to put together my export plan, how I'm going to go about promoting and marketing, and also putting together the different packages that I have in mind on how I'm going to provide that service to the end user, which in this case could either be a government entity or private establishment, or even a non-profit, depending on where the need is, because there are different, the healthcare system, in the foreign country of interest is definitely, have to understand it, and then be able to identify the potential clients who might be interested in the type of service I'm offering, and try to figure out how I'm going to connect with them, and provide them the value added service to supplement whatever they already have on ground, and that will get them to buy my service, and so that's what I'm looking into at this time.
Okay.
Kimberly, I wanted to add to the question. My understanding is to qualify for EXIM, you may be new to export, but the company has to have been in operations for at least 3 years.
So I'm going to call that a relaxed guideline. That is certainly their published criteria. But I would, have no problem at all having a conversation with EXIM and seeing if, they could, to extend coverage, even if you're not quite at that 3-year mark yet. But
How about a startup client though, a company that just started? Would they be
Oh,
eligible?
you do need to have a year under your belts. You need to have some numbers to show that you are profitable. So that might be your first hurdle to get over. You're right, Andrea. Might be a little bit too soon. But let me also confirm too, are you giving these services to another company, or are these services going to an actual patient?
So the services will be to an actual patient, but the buyer, the foreign buyer, would be the company, either a government hospital or a private clinic, eye clinic, or an established NGO that is looking to broaden the scope of services that they provide. There are certain NGOs that
Okay.
in obstetrics, they take care of women in their pregnancy. they may be looking to provide eye care, either, to kids, to the elderly, so that's my target client. Those are my target clients. But the end goal will be, I'll be providing my service to the patient, but the buyer would be the entity that I'm going to be, doing business with, and then I would then, and they will be the ones to pay me, and to provide this service to their, to the patient. If that
Gotcha.
makes sense.
So you'd be billing the insurance carrier. That's, I assume.
They do not, again, the health system, it depends on the country and their system structure and how it is set up. Some countries do have a free health care in, some, but some don't. So it all depends on,
That's right. Right.
the-
I understand. Okay.
yeah,
All
the-
right. I do. Yeah. I mean, I think it's a great idea. I do see some potential. And, certainly, the advice, to request cash in advance, is good. But with that, with the trade credit insurance policy in force, you could offer terms, without the risk. So yeah, when you're ready, remember.
Thank you so much. Thank you.
Yes, it sounds like a great business model.
I don't see any other questions coming through, but if anyone does have questions, please feel free to put them on the Q&A box. As I mentioned at the beginning, this session is being recorded. You will get a link to this recording and a link to the slides after. I do see that we have someone who called in, and I'm not sure who the phone number belongs to. So if you could please send me an email after the session, just so I can make sure to get all the materials to you as well. You should also receive a post-event survey just to let you know your thoughts on how you think the session went and what other topics you would like us to cover in future sessions. And if you would like us to share your information with Kimberly for any follow-up, that is the best place to let us know. Or you can also just send me an email and I'll make sure to put you in touch. So I'm going to give it another minute or so to see if any questions come through. Kimberly, thank you so much for your time this morning and for all the information. I think this was a lot to absorb, but I think you answered many questions.
I'm so glad.
Thank you to everyone who attended this morning. We absolutely hope that this conversation was useful. And if you have any follow-up questions, please feel free to email me and I'll make sure to put you in touch with Kimberly for answers. With that said, again, I'm going to stop the recording and I'm going to end the session because we don't see any more questions coming in. Thank you so much.
All right. Thank you. Have a good morning, everyone.